live today on Wednesday, December 10th. Going mobile today, so haven't done it this way yet. So we'll see how this works. Stick with me. I want to give you a real live example of advisor fees that you need to pay attention for that will kill your return. In the meantime, just wanted to quickly talk about the market today. The market took Jerome Powell as much more, not dovish, but he wasn't as hawkish as expected. So they did cut rates 25 basis points as expected. They're going to be buying more treasuries, which was, I think, a little bit of a surprise, or at least the amount and the timing of buying those treasuries. So some people would look at that as quantitative easing. That could be helpful to the markets. Also, he said they were on a wait and see kind of timeline with further rate cuts. I think the projections on the dot plot that also came out today showed there could be 2 rates in 2026. I don't know that I would put much stock in that because, Jay Powell's going away. There's going to be a new Fed chairman, and Trump has already been on the news, and this afternoon, even since Jay Powell's conference, talking about how our rates should be lower and the United States should have the lowest rates, and going on about that. So I can't imagine that dot plot won't change for 2026. It'll definitely depend on who is going to be the new Fed chairman, but I still would expect that person to be friendly to the administration and more likely to lower rates, if anything. Let's see what else. I just lost my computer connection there, so my notes are gone. This is live and unedited. The Powell did say no hikes are in sight. Well positioned to wait on the current environment. They are watching the jobs report and continuing to watch inflation, and that actually to the economic projections, the summary of economic projections are higher for 2026. So that's actually positive for the economy, and all of these things. Just as far as what it matters to you is that the market took it positively and closed higher for the day, much higher than we started this morning. We kind of sold off a little bit at the end of the day, but the overall market was up, and especially small cap stocks were up a lot today. So that's kind of the market summary. All right, let me just give you an example of advisor fees to watch out for. I am an advisor. We don't do this at Fish Creek Capital, but I got this an annual shareholder report from another client's investments, and this is the kind of stuff you got to watch for on investment or fees that you're paying that your advisor might not tell you about. Like I just had one conversation to where the person investing with this big firm thought they were going to have like a management fee of 0.5%. Well, what they didn't realize, that firm was selling them products, life insurance products, annuity products, all things that have fees on the back end, and they don't, you don't normally hear about those. So if you're being sold a product from a big firm or brokerage wirehouse, watch for the fees in the fine print, especially if it's life insurance or if it's some kind of annuity. There's going to be fees on that. So pay attention to the fine print. In this case, this is an American Funds U.S. government money market fund from... Okay, I think we're still going. I got a call there. I haven't had that happen either. So again, live and unedited. Hopefully you're still with me here. I think it shows that you are. So this example is with American Funds Capital Group. I can show you. This is real. And what I've got here is actually a money market fund. So the whole point of a money market fund is to gain interest, right, on cash. Basically, if you got money in a money market fund, it's cash that you're trying to get a higher interest rate on. Like, that's the whole point of it. Well, so in this case, this money market fund has a fee of 0.66%. So if you're paying an advisor, let's say 1%, and then you're expecting to get a return, a higher return on your money market account that is going to be better for your cash. Like in this case, they've got a 1 year, let's see, their 1 year return is showing 3.85% on the average annual total return on this money market fund. Well, what they're not, let's see if that's saying, the results assume all distributions are invested. So basically what this means, though, is as I look at this, the fee on that is 0.66%. So, and if you're paying an advisor another percent, well, then now you're looking at 1.66% to do this money market fund, and you don't need to do that. Like if you're paying fees to a mutual fund or some kind of fund company like American Funds, Capital Group in this case, you don't need to do that. I can show you how you can get interest without having to pay more fees, because that's the whole point of a money market account anyways. So reach out to me if you think you've got like a money market fund like this. I can help you look at the fees, look at the overall account, and what you might actually be paying from a complete holistic perspective. You can go to fishcreekcapital.com, click on learn more, and you can reach me that way, and I can reach out to you. You can also go to any of my other videos. Won't have it on this one because again I'm remote, but look on any other video and you can click in the description and see a link to be able to schedule a free 30-minute introductory call with Fish Creek Capital. So that's another way to find me. But these fees will kill your return, especially on a money market. 0.66% added or taken away from your gain, again, on just cash that's sitting there. That's not good. So thanks for watching. Hopefully this is working. Please like and subscribe and follow, and we'll catch you tomorrow.